Welcome on today's episode of Growth Edge, where we speak to leaders in wealth management and financial services. For those just joining the podcast, I'm Chris, founder of Aulio AI, and we partner with ambitious businesses to accelerate growth using AI automation, outreach at scale, using data-driven systems, and next-generation marketing. So if you want to learn how to take your business to the next level, make sure you stick around. And if you're interested in a free growth plan, drop the word growth in the DMs. Today, we have Boris Castillo, who is founder of Amity Wealth Management from Long Beach, California. Boris, do you want to go ahead and share a bit about your background, your story, and how you came to start Amity Wealth Management?
Thank you, Christopher. This has been a long process. Yeah, it's amazing. I got licensed back in the late 90s. So if you take the time I was an assistant and learning the ropes, been in this industry 30 years. And I knew one day I would go independent, but life happens, things come up. And I wasn't really, until I had a clear vision as to what I wanted to do differently, I thought, okay, well, I'm just going to be one more shingle out there. And so 2008 was kind of a big moment for everybody.
For everyone.
Right. And for me, in what was like a still a nascent career, because I got licensed in 98, then 2000 to 2002, 3 down years in the S&P, and the NASDAQ lost, I don't know how much, more than half its value. It was pretty, mind boggling. And then just when we think we're out of the water, or just when we think it's safe to get back in, then 2008 happened. And I lost my faith, actually. I thought,
Really?
oh yeah, I left the industry for 2 years, went back east to be with the family business for a bit while I decided what my next step was going to be. Learn the important lesson that if you have a good relationship with your family, you want to keep it, don't go into business with them. Unless that doesn't, of course, count for everybody, but was
Yeah.
having to be true in my case. And then I wanted to go back, but I wanted to feel more competent. And rather than get an MBA or master's degree in finance, I went for my charter, the CFA, which is Charter Financial Analyst, which is, 3 high stakes exams that cover pretty much every minutia of, wealth management. And in fact, it's even grown since then. When I took it, you had 2 opportunities a year to take level 1, only 1 opportunity a year to take level 2 and level 3. And these were all done pen and paper or pencil and paper or bubbles in a giant class globally all on the same day, right?
Wow.
First Saturday of June, except for first Saturday, December for level 1. Now they offer level 1 4 times a year, level 2 3 times a year, level 3 twice a year. Oh, they're raking in money hand over fist. Not only that, but it really does go. There's a saying, if you're going to compare MBA to CFA, look at them like rivers. The MBA is much wider, but shallower, right? Because it covers organizational psychology, different stuff. CFA is much narrower, but deeper. Trust me, discounting is what you will do in your sleep. Like that's stage 1. And then you go on so many different other ways of valuation. And I've learned from newer minted charter holders now that they've broken it up into traditional portfolio management and private equity. So for those people that deal in private equity, that just want private equity, want to stay in private equity, yeah, CFA is now kind of tailoring the curriculum for that.
Okay.
But I'm glad I got it because I felt more competent and I, felt that I could do a better job for the clients. The issue is that the more it can put you in paralysis because now you know where all the trapdoors are, right? Now
Yeah.
you know where all, so you can kind of get in your head about it. And I still wasn't ready to go independent, so I was looking for a job. Well, the problem is they say CFA after your name. Oh, you're an analyst, right? No, I was an advisor for like 12 years or 15 years, so I got my charter. So that's why I got the CFP. Because when they see the CFP, that's what most retail brokerage houses kind of look for. That's, differentiation point. And it's easier if you already have your CFA or JD or CHFC. You don't have to take all the classes. You can actually just sit for the exam and do what they call a capstone course, which is a
Okay.
great review. So, I got designations. I got back into it. And I think what I learned was, even though I felt more competent, what really, really moved the needle for me was the people I felt that I made an impact in their life. I remember there was a woman who she was very nervous and she brought everything. Like, or, you always tell them to bring everything. Very few people do.
Yeah.
Like, she brought
Everything.
So I'm like, okay, let's go through it. And we started inputting the data. We had a follow up a week later, and I remember showing her, look, you're fine. Your equity exposure is minimal, so even if there's a big bear market, it's not going to affect you. You have these pensions coming in. This is your stuff. You got your home note sunsetting in 2 years, and you have long term care. You're fine. So she actually wept. She actually wept. I saw the tears come out of her eyes because she's like, thank you so much. I didn't think I could do it. And I remember I drove home that night. I told my girlfriend at the time, I said, this is one of the best days I've had in this job. And it really started kind of opening as to what is it that moves the needle for me. And then, the more you talk to everybody, you find just like I forgot why I got in this industry. It started off like I really thought I was going to make some money, bank it, finish my graduate degree and become a professor and have enough money so I wouldn't have to live hand to mouth while I was, baiting for tenure, right? But what gets you there is not what keeps you there. By the time I got into it, and knowing more about academe, I know a lot of people love life in academia, and I know a lot of people who don't. There's this thing in academia, everything is of the utmost importance because the stakes are so low. And my apologies to any academics out there, but I have heard that. I've heard there's a lot of backbiting and all that stuff versus these people who are just trying to live their lives and have forgotten. I started saving for retirement because I wanted to do X or I wanted to do Y, or I just didn't want to have to work for this anymore, right? So finding that in people has become the kind of real art
Yeah.
to what we do now. That's why my tagline, and we're changing the website now, but the headline's going to stay. It's not just about the money because people forget that. And we've done enough studies. Daniel Kahneman, who won the Nobel Prize for economics, even though he's a psychologist, had shown that when we've done studies that just showing dollar signs, just talking money, people start to get more defensive. They start to go in a scarcity mindset. They start to get greedier. Right. And so all this is counterproductive, right? Because when you're in a greedy mindset, it's the other side of fear, right? So now you're gripped by something and now it's an interior state that you're hoping to rectify with exterior, right? Proofs like, well, I have enough money. But the problem is that if you're scared enough, you'll never have enough money. Even if I show you time and time again, we can go through 16 bear markets, right? And you're fine. No, the psychological reality trumps everything, right? At that point in time, fear is one of the best things I heard, best acronyms I heard for fear is F everything and run. And that's kind of what happens. So people just get in that mindset where they're so focused on getting out from under the discomfort, they don't really pay attention to the solution they're undertaking. Now it's like, okay, I no longer feel discomfort. I'm okay. And it's like saying, no, you thought you were reaching for a life raft, but rather you grab the dorsal fin of a shark, right?
Yeah.
You're not drowning anymore, but soon you won't be doing anything anymore.
No.
So that's why I thought, okay, when I had the clear vision, let's go. Chose an interesting time, 2022, right? The first down year for both the stock and bond markets. And I remember telling myself, well, a lot of asset managers started in 1929, they're still around, right? And started in the 30s in the middle of the depression. So I thought, well, this will just make us stronger. And, we're now 3 years and change into it. We've been growing every year. I'm very grateful for that. But we had some staff change over, which we've tamped down now. I think we found the right people. And now I'm just looking to grow from here.
It's interesting. Very interesting backstory. There's a lot you had there, which is great, to be fairly honest. Going back to when you found the purpose was the fulfillment that you're getting through the clients. Is that right?
Well, that's my purpose. Their purpose is to key into their own fulfillment.
Yeah.
Right. So, and so you have uncomfortable conversations because there's no way around them. People think like, well, I don't want to bring up, I don't want to give them bad ideas. Like, no, it's still there. And the problem is that until you get them to label it and say, this is what's happening to me, they can't strategize around it because it's just this uncomfortable feeling. And I'm doing all this stuff to shake it. I can't. It's like shaking anxiety at 3 a.m. when you wake up, right? Your brain will come up for a reason you're anxious. Right? It doesn't matter what it is. Like sooner, like, oh, that must be it. And then you think you're helping it. And then 24 hours later, you're back in the same rut, right? So unless you get at it, unless you know what is the issue here, they are still reacting to it. And they don't know they're reacting to it. And let's say you do something, they take it the wrong way. Next thing you know, you've lost a client that it took you X amount to onboard. And knock on wood, that hasn't happened to me since I went independent, but it happened to me before. I mean, every advisor's had like, everything was great. We did the whole plan. and I put them in advisory, and they took it away from me 13 months later. Had I known, I would have shared them, right? At least gotten something from my time.
Yeah.
I worked on the idea that we were going to develop a 5, 10, 20-year relationship, not 13 months. So
Very much.
that's the issue that, we see. And it's because we didn't get at what their real motivator is. I mean, and this is something that's just part of human nature. A great book that is still a perennial favorite, How to Win Friends and Influence People by Dale Carnegie. He's got a chapter. There are always 2 reasons people do things. I say there are 3. The 2 reasons goes, the reason they tell you and the real reason, right?
Yeah.
I say, yeah, and this is like what, in the 50s, right? I say it's a third. Like the reason they tell you, the reason they tell themselves, and the third reason, because sometimes they're not even in touch with the real reason.
No.
Sometimes they don't even know the real objection, and it's taken a couple meetings with some people to get like, aha, that's what it is, right? I knew it was something else because I just didn't feel that click, right? Which you don't always feel, but when you feel it, okay, we've got it. We're on the right track. Now we can make progress. Now we can move forward.
Yeah, you really have to get wrapped down into the nitty gritty with your clients, don't you? You have
Yeah,
to know all about them. You have to sit them down and say, I need to know everything about you so we can move forward with planning something for you. Because if I don't know something, then it's not going to be tailored to you and it's not going to go right, correct?
exactly. And now you know why it's so difficult for people, because that's a lot of vulnerability. It's a lot of,
There's a lot of vulnerability.
oh yeah. And people are like, who are you? Like, what are you doing with this information? Right. And I get it. I so get it. I mean, ours is harder in many respects than doctors and lawyers, because
Mm.
now that, now the internet has made it challenging for everybody. Like, I have doctors that tell me it's amazing where people second guess me. And I always tell them, well, then Google WebMD for what your prognosis and your therapy is then, right? Why are you here? Same thing with attorneys. With us, because we were always kind of commoditized, right? They didn't look at us the same way. And there's still that sense like, there's so many, but I remind, there's so many of everything. Right. There's so many doctors, so many lawyers. And really, because I mean, what's great is that you're AI. I remind people there is only so much art to this.
Yes.
It's mostly science, right? And so, but the problem is that the science isn't always enough to really move the needle for them, or they really don't see how it applies. Like, yes, I guess this and I get that, but how's it affect me? Right.
Yes.
So that's one of the reasons why our job, I think, is much more difficult as advisors. Also, not all advisors are the same, just like not all doctors are the same. There's an old joke. What do you call someone who graduated last in their medical class? Doctor. All right. Doctor. You don't know where he or she, landed, he, she, or them. But yeah, I mean, and because there's so many designations out there now, right? Of course, everyone knows the MBA. Everyone knows CFP. Believe it or not, CFA, as proud as I am of it, only colleagues really see the import of it. I've met one client who Googled it and said, "Oh, wow, okay, that's a big deal." That they don't know.
Yeah. I think that's overlooked, isn't it, a lot?
And CFA Institute is doing their best to try to get more notoriety behind it. But I mean, I think, I mean, and Lord knows they must have the budget by now. But that was, I think, 2 presidents ago. A great gentleman from Britain. I can't think of his name, but he worked for UBS, and that was his primary focus. I met him in Los Angeles, and unfortunately, they change presidents like everything else does, and then it becomes a new focus. I think they've really, really expanded in terms of offerings for testing and, of course, curriculum
Mm.
adjustments. But still, I would say probably the same amount of retail investors know what a CFA is than they did 5 years ago, maybe a marginal amount more. And don't get me wrong, that doesn't bespeak the value at all. It just bespeaks the fact that not enough people know about it. And so
Yeah.
that's the only bone I have to pick every time I send them the hundreds of dollars a year I need to maintain that, plus the CE I got to do. Like, it'd be nice if you guys just, threw some of this into marketing.
Yeah. So do you have to do refreshers to keep
Oh,
that
yeah. Oh, yeah.
maintained? Is that every year?
Every year. Every year. It's funny. They're in the honor system. I mean, luckily they send us, the journal. So if you read enough articles there,
Yeah.
you've covered it. FP, much more rigid about it. They need the third party to report your CE. Okay? They're not
Okay.
going to take your word for it. And yeah, you need to have that all booked before renewal. Now, what's nice is that the CE requirements are only every other year. So every year, you pay your dues, but it's only every other year they want Like, for example, I've now, and it's easier than you think as long as you keep an eye out. Like, there are plenty of webinars that asset managers will do. I'm like, okay, I'll kill two birds with one stone. I'll learn about this new, what the qualified opportunity zones that are now available to the high net worth clientele. And I'm going to get CE credit for it. Yeah, sure. Kill two birds with one stone. So now I have enough. So now I just need the two ethics. And that one you always have to pay for. Nobody offers that for free. And those two, they never let you go because it's a separate line item. Ethics complete 0. So once I finish the ethics, and yeah, which will be just in time because I'll probably do that for the end of the year. And then April of every year is when they do around your birthday month.
Yeah. Does it change a lot though? Is there like new additions onto it?
Yes and no. There can be, like, I have to search out for the real, usually it's like run the mill stuff, or sometimes it's stuff that will be something that is covered by your CE in another license. So, for example, FINRA, with, since I have my Series 7 and 65 and 66 and 63, they're going to do a lot of stuff. So, like senior abuse, I won't do that with CFP because I know every year
Yeah.
FINRA's going to cover it, right? So I'll have that. But FINRA's not going to cover qualified opportunity zones. FINRA's not going to cover 712Es or 412Is. Like, that is really, really next level. And I geek out on that because, yeah, maybe 1 to 2% of our clientele are ones that can really do that as we start building out our ultra high net worth sector more and more. But it is really fun to kind of get into these, like, granular and very complex cases, but I mean, they take time. I mean, I'll give you an example. I use eMoney for our financial planning software, and it's very good. It's very robust. The problem is that it has its own way of doing things. And then
Right.
if I want something a little bit simpler, I have to break out a spreadsheet and model it. So I have a client who has a lot in pre-qualified funds, and his first RMD is going to be in 5 years. So I'm doing the math. I'm like, look, if we just get a 5% return, you've got 6-figure RMDs, even what we're taking out now. So we're going to have to accelerate it. And he's like, well, what about RIMAA? And what about the effect on the new senior excess, what the standard deduction? And so I had to sit there and work it out. And oh, yeah, I had to put the MIGA for, which is the modified adjusted gross income, because all this tax-free stuff and all his capital gains get figured back in. And it's like, yes, you will be paying more, but if you don't do it, your first RMD is going to be in the low 6 figures. What's going to happen to your tax bracket then, right? What's going to happen? So we have to get ahead of it, right? So it's one of those things. Because yeah, I remember I gave a bunch of tasks to my associate, and he's like, "What are you doing?" I'm like, "This. Like, trust me, if I give you this, I would so give you this." But I had to do it myself, and now I'm going to talk to the client today at 1, and then we got to rope in a CPA, and yeah, what we're going to have to do is start doing some larger before the end of this year, larger RMD, and some will be Roth conversions, some not. A lot of people are doing the Roth conversion thing. A lot of clients don't know that every single conversion has its own 5-year schedule.
Oh,
So you do
interesting.
one now, yeah, you can't take it out till 2030, right? Exactly. And so, some people know that they're okay with it. Some are going to find out the hard way.
Yeah.
But yeah, I took a very circuitous route to say, this is what keeps me going, and what I kind of have trying to build here. And yeah, and so like I said, we're expanding, and I'm trying to find easier ways to do this. But yeah, one of the things I'm going to do is probably sign up my associate firm Excel modeling class
Mm.
and just get him to do it, because longitudinally be worth it, and it'll develop him. And I'm banking he won't leave, but in the interim, I still get value out of it, because yeah, if I told you how many hours it took me to model that out, I was like, oh boy. Plus, when you don't do it every day, you lose your touch. And so
Yeah. So you kind of enjoy it, don't you, in a way?
I enjoy getting a solution, right? But doing it
Mm.
there, like, I get why people go on ChatGPT, build me an Excel spreadsheet that does this. And I'm like, I can't, because I'm going to have to go over it anyway, because
Yeah.
I did that. I used ChatGPT for one thing. And yeah, the hallucinations through the roof. I'm like, where did you get that number?
Yeah.
Right? And so this is one of the reasons why some things you still have to be done the old-fashioned way.
100%.
Now, I'm sure in another year and a half, the AI is going to just do away with that. In fact, I've already seen prompts that they give you on Instagram to help bring down the amount of hallucinations. Like, this is why ChatGPT does this. So if you tell it do this, don't do this, don't do that, it should give you some, good material with, that's accurate. I don't know what I did with that prompt. I've left it here somewhere.
The thing is, there's so much out there and so many prompts and prompt engineering that you could chuck at it. It's like it's hard to keep track of it. I've got a list of loads I keep forgetting to go back to because I end up looking at something else as well. So it's hard to keep track of all of it, especially when you've got data set after data set after data set that you want to use to throw into there.
Yeah, yeah. And then every day, and we talked about this, every day there's something new. Like even if you're in this space, soon it'll be like 2 new things a day, then
Yeah.
4 new things. And it is literally our minds were not meant to catch up with this, right? And only an AI would be able to, I mean, this is why sooner or later, even though I just saw another study that said large language models, I mean, they can't reason, so we're not gonna have that singularity effect anytime soon, even though Ray Kurzweil thinks like, oh yeah, it's around the corner. I remind people that, the Turing test doesn't necessitate that the AI can think. It just has to make you think that it can think.
Yes.
And if you can't tell the difference, then it passes the Turing test. Now multiply that by a subscription-based model that does good enough, and 80% of the time we get it right. Well, now you have a viable business, right? And you just figure out ways to handle the 20% of times that are wrong.
Yeah.
Yeah. Yeah.
It's very interesting, isn't it?
Mhm. Mhm. I see kids now, it's like, "I'm gonna get on this while I can." I'm like, "I would too." I mean, when I was younger, when I was in my 20s, it was a dot-com bubble,
Yeah.
right?
.com. Yeah.
And one of my best friends, who's now semi-retired, he and I were talking about ideas, like, we could do this, we do that, and we would make jokes that, we just come out with dot-com, we take it public, $10 million valuation right at the start. And yeah, I mean, I saw Mo Gaudat on another being interviewed. And he said, all you have to do is say you're an AI company, you get a $25 billion valuation. It's that kind of Wild West that we're seeing now,
It
like we
is.
saw.
There's a lot of people investing into these AI startups now. Like just have a good idea, know how to do it, and like the investors that will put the money into you is crazy. I've seen it a lot across Europe at the moment, but a lot of these startups are failing, but a lot of them are going pretty well at the moment. Especially, you gotta remember they've got the guidance of AI as well. So
Right,
if something
right,
goes wrong, they can fix it. They don't have to rely on just their sole thought process. But like
right,
where it's also, for example, you're using AI a lot, it's going to give you the same sort of outputs. So a lot of these AI companies and AI startups are all going to look the same, especially if
right.
they're using the same sort of AI context. But I did actually have a read today about, I think it was about vibe coding. So people that are starting up their own platforms, like SaaS platforms and stuff like that, but they're
Yeah.
using like I think it's Lovable. So it's basically like coding by prompt,
Okay.
right?
Which I have heard a lot about that. Yeah, I've heard a
Yeah,
lot.
so they're coding by prompt, but they're starting to realize that it's good for like demo purposes. But say that gets released out into the public and hasn't been like looked through from a proper developer or gone through or any of the process. When it starts to fail, that founder that doesn't know how to do any of the development side of things, they don't know how to fix it.
Okay. Okay.
So it
Yeah, that makes
becomes a
sense.
bit of a problem. So you're getting a lot of these startups that are actually starting to fail.
Okay, because yeah, they don't have I guess they don't have enough people to overlook and see where the AI is failing. That
Exactly.
makes sense. It makes sense. It's Wild Wild West, so yes, like we said, you're gonna
It
have a
is,
bunch of fly
yeah.
by night.
It's the AI bubble currently right now.
Yeah, yeah, and everybody struggles to use that word bubble, right? Especially when it comes to the stock market.
Mm,
I was a little overcautious after 2022, and this AI thing has just kept rip roaring. So, like everybody else, we've been dialing up the risk, knowing, look, this could turn. We're losing breadth in the market. All the signs that you usually see before market turn are
yeah.
there, but the problem is they've been there for a while now.
Mm,
And one of the things that it keeps ringing in my head is Claudia Sam is she was with, I think, the San Francisco Fed. Brilliant woman. She is famous for what was known as the Sam rule, which used to be tried and true, which stated more or less that if the unemployment rate goes up half a point over the last quarter, boom, it then shot right up. Like that was the beginning of the next recession, right? Because
right.
Less people working, less aggregate demand, less buying and selling, right? Recession. The problem is that we breached that in 2023. And even she said, because of all the money, all the liquidity that the Fed threw in 2020, it has rendered all these models really not null and void, but it's made them less effective. Because if we look at all the CAPE ratio, right? The cyclically adjusted price to earnings ratio by my favorite economist, Schiller. It's been screaming bloody murder for a while now, right? And general price to earnings ratios. And so the problem is eventually they will be right? But it's a time factor. The people that are right before it happens are going to be geniuses.
Yeah.
The ones 6 months to a year are fools. And that's a sad fact. It's a thin line between late and wrong.
Yes.
All right. Especially when it comes to prediction, because prediction requires a timeline. Otherwise, it's like me saying, you're going to die. When and where? Couldn't tell you, but you're going to die.
Yeah.
Right? What can you do with that information? Not a lot.
No,
Right.
not a lot. I get that. It's a very, very interesting perspective. Trying to, no, I was going to come up with a solution there, but I think it would be very off topic. Well, shall we go back to the wealth management side of things then? So what trends, especially we've just talked about AI, but like what trends are you noticing in your industry currently?
Okay, well, the AI has done well, but now it's further and further. Fewer and fewer names, right, that are really, really still frothy. I saw that because Intel was up today because I forgot which chip it was, chip maker, Qualcomm, which is actually a favorite old one of mine because I use this for clients all the time that kick themselves about NVIDIA. Oh, I missed NVIDIA. Yeah, before NVIDIA, it was Tesla. Before Tesla, it was Qualcomm. There will be another NVIDIA, all right? But I've noticed that, and a lot of people aren't talking about this enough. The S&P has outperformed international a lot, except this year. On a year-to-date basis, it's gone below the MSCI EFI, which is Europe, Asia, and Far East, at some points by more than 10%. It's closing the gap a little bit, but we still see that. Now, Jeremy Grantham, very famous bear, who was right more than he was wrong, but who has been talking about the bubbleness of this economy for the last 4 years, has said that emerging markets are the most fairly valued right now. And I get that. One thing we had also done is I had told clients, look, most likely interest rates are going to go down from here on the far end for 2 reasons. Anxiety about the economy. And the one thing that you can count on about this administration is when they say something loud enough, for sure they're going to do it, right? Even if it's like we're thinking means we are now putting things in place to do this.
Yeah.
And I can't think of his name, but their new Treasury Secretary basically said we are going to start bringing longer term interest rates down. And I get where the incentive is for that. They want mortgage rates to keep low, right? Because then that makes a frothy real estate investment, right? Or the housing market. So it's interesting to see that last week we saw the 10-year go below 4% again. To put that in context, back in April, when he first mentioned the tariffs, within I think the span of 2 or 3 days, the 10-year went from 3.98 to 4.5. Right, that's a huge jump in 2 days. And why? Well, from an investor standpoint, tariffs mean inflation, which we're seeing now, right? Even every asset manager, even Goldman Sachs is coming out like, yeah, there's no way that they're going to absorb all these price hikes, right? Inflation means I'm not going to stay with 3.9% bonds, right? So, of course, they sell, that jacks yields right up. And that's where he got nervous because high yields now means everything's more expensive, right? Credit card debt, all of it, adjustable rate mortgages, new mortgages. So that's why you put the moratorium, right? 100-day moratorium to let it settle. Since then, it's been slowly but surely coming down again. So we did treasury ladders for a lot of clients over the last 2 years. They said, look, these are the highest we've seen bonds in quite some time. They are not going to stay here. And what we can do is that as they come down, we're going to get that capital gain. And another thing for all bond investors, when interest rates go down, bond prices go up. But holding everything else steady, the only way you can increase your bond portfolio by taking advantage of that is by selling. You have to sell some of those bonds and reinvest, yes, at lower rates. But let's say your bond portfolio went up by 20%. Let's say interest rates cratered. If you don't sell as it comes closer to maturity, those prices are going to adjust to par value. So you're going to lose all that. But if I sell and I reinvest that principal into more bonds, 100,000 portfolio now becomes 120,000
Yeah.
notional portfolio. If it goes the other way, well, then you just hold on, right? You just hold on to your
Yeah.
bonds, don't be selling, right? But that's how people build up a bond portfolio over time. We did a lot of that. So, I put a feather on my cap for that. But I'd be lying if I said that, oh, yeah, I saw this market going all the way to 6,700. No, I personally made money buying puts in my personal account, where with clients, I told them, look, full disclosure, I have puts. I think we're going to have a big, big correction, which we did. But I had to explain to them, I can't do this in your portfolio because I have to take a fiduciary approach, right? That's the
Yeah.
standard. If you have a CFA and CFP, you have to. You
You
have
have
to. It doesn't
to.
matter if the firm you work with does not, you have to let them know I do. And if they say, hey, we're not equipped for that, well, then you got to sell, right? Or lose the designation. So I went about it by other means, right? Another way that you can, instead of buying a put, but kind of benefit from downward price action is buying the VIX, buying an ETF of the VIX. Because if you notice, the
Mhm.
VIX generally goes up really high whenever the market's in free fall,
Yeah.
right? That's when the volatility just skyrockets. The problem is you're trading the VIX more on that point in time. So it's not really a buy and hold. It's tough to chart the VIX. There are people that have done it. There are master charters out there. And, my hat's off to them. I'm not one of them. These guys get really granular. I'm more of a big picture person, right? I mean, even in my own account, I'll make one or two high conviction trades, and knock on wood, I've been right. And knock on wood, Trump made me right in April. I should have been wrong. I should have staggered my puts. I didn't. It was kind of an all or nothing at 5,200. And then I woke up on a Friday. I'm like, hey, I'm way, way, way in the black because I had leaped. So I had all this time value. I'm like, sell, sell, sell. I didn't vote for him, but MAGA. And
Yeah.
right. And then since then, actually, I've kind of stepped back. I have a friend who judges market movements based on where Palantir is. He's done
Oh,
really well.
interesting.
Oh yeah, that's his bellwether. I had breakfast with him on Saturday. He was telling me I do this, I do that, and yeah, he just does futures a lot. I like options more than futures. Yes, futures are cheaper and they're much more liquid, but I hate the overnight, mark to market kind of thing. So you
Yeah.
realize, I'll just wait. I'll just hold this thing and wait, and then deal with because options have a very part long term, part short term kind of way of doing it. So I'm like, yeah. The problem is that you have a lot more embedded costs in an option than you do with a future
Yes.
contract. So you better be like, that's why it makes sense for a really big bet. But for these, I mean, he takes tiny bets on the daily. I mean, he gets himself,
Yeah.
if he gets himself 0.5% on a daily basis, it's 2.5% a week, right? That's 10% a month. He's fine with that. I'm like, I do not have that time. Not like that. Then I just feel like I'm just getting fat. I'm in front of the computer and I'm like,
Sat at a screen, look at
oh,
chart and
yeah. I'm
lights.
playing a
Yeah.
video game all over again, except now the stakes are much higher.
Yeah. I've been there and done that. That's how I bought my property through crypto.
Oh, wow. Okay. Yeah. Yeah.
So that was 2020. Did pretty well. Started with £200,
Oh,
and
wow.
we got up to 20k in
That's a
three
hell of a,
months.
in
But
3 months.
but I did not leave my computer desk.
Yeah. Okay.
I
So
literally was sat there, just honestly, my eyeballs were bleeding.
I had to do that. Yeah. Wow. You gave yourself 1,000%. I mean, that's a huge return. More than
Yeah,
that, actually.
and after that, that was it. I was fully burnt out. Haven't gone back really. So
I saw a Maserati the other day where a guy had Crypto Trader as I think a CRPT TRD, crypto trade or trader. And I thought, good for you. It's worked out. I remember, so in the late 90s, that's when all the online stuff started, all the online trading. That's where you had the first study or the first bit of stats, which I think have held steady, where 5% make money, 5% break even, 90% lose, right?
yes,
Most people. And I even saw that in 98. This is 98. Remember, the market kept going until 2000. And then from 2000, 2002, it just started drifting down. And I met a woman who was a divorcee. And she told me her husband had sold his business. He had an exotic car body repair shop and painting. And he sold it for 3 million, which is 1998 money. That's a lot.
That's a lot of money.
He lost it all in the market. I'm like, "How did he lose in this market?" And it's probably because, he didn't get enough time, he gave him trades. I mean, there was one contract that I got cocky. After I made all that money on that, I'm like, "Oh, I'm gonna leave one contract." Ah, that one expired worthless, of course, because the market rebounded and it's
Yeah.
now way up high. So I get where people get cocky, but I guess he got extra cocky and he lost it all. And that's why, yeah. So it's possible for people to lose money. And then what'll happen is that if we do have a huge downturn, that's where you're going to start seeing people be a little bit more open to hearing stuff. Right now, it's one of those markets where, you buy the right 5 stocks, it's going to outperform everything,
Yeah,
right? And it's
100%.
it's one of those markets where, of course, the S&P outperforms all the fund managers. Why? Because unless you're indexing, fund managers, if they're diversified, can only put a certain percentage, I think no more than 4 to 5% into one position versus the S&P where the top two stocks make up 13%. You're 7.7% Nvidia, right? And 6% Microsoft. And then after that, it just goes to Apple, or was it Apple? Yeah, I think Microsoft was
I
up
think
higher
so.
this time than Apple. Yeah, I mean, those two keep switching
Yeah.
around and everything, and it depends on what Warren Buffett bought this week. And that's another thing I find. He's still sitting in a lot of cash, Warren Buffett. And that's
Yeah,
another
it's
bearish sentiment. That's another bearish indicator, right? Where
yeah.
he thinks that, yeah, prices are going to be good for some of these things. Well, but I noticed he hasn't bought any AI companies. Not yet, at least. And what's interesting is the same thing happened in 99. He does his Berkshire Hathaway thing. And luckily, I have a pretty good memory. I remember I was new. So who's this Warren Buffett guy? I'd heard about him, obviously, but
Yeah.
I didn't know. And at that meeting in 99, he told his shareholders, "We're not in tech. I don't understand it." And I remember the Wall Street Journal lambasted him, everyone lambasted him. And less than a year later, who was the genius again? And I'm hearing a lot of those same voice. It's a new economy. You can't use those old methods. I'm like, God, I've heard that. And it reminds me of an old saying by John Templeton. John Templeton, right? Franklin Templeton, he's got two great sayings. The first one is bull markets are born in pessimism, rise in skepticism, mature in optimism, and die in euphoria,
I've
right?
heard this before and I really liked it.
It's really, and that's one of my favorites. But the other favorite is the four saddest words in investing are this time it's different. And how often have we heard, and we're hearing it now. And so what I tell people that want to increase their equity portion to where I know is higher than where their risk tolerance historically has been, I remind them, I show them, how the market's been way up here. Here's the median, right? And I say, if you think markets are mean reverting, one of two things is going to happen. Either this level is going to go below here sometime in the future, or this time it's really different. Exactly. They all laugh. They all laugh. So the question becomes, how do we prepare for that? And I mentioned, okay, we can do the VIX. We just scale back. We don't get greedy. We remember, and this is why I do financial planning. One thing we focus on is what target rate is going to get you so that you pay your stuff today and in perpetuity, figuring inflation, cost of living, all that other stuff. And that becomes our central portfolio target. And I remind people, even corporations, right, that do these different investments have a central strategic portfolio where they think,
Yes.
right, because we need to outpace inflation, but we're not going to take crazy bets. I would love to see what the Harvard Fellowship is. And it wouldn't surprise me if we had a lot of T-bills right now. I know that Fisher Investments is telling people loud and clear, hey, we're divesting from some tech. Now, of course, it helps Fisher Investments. Like, let's spook other people. They'll sell too, and then we look like geniuses, right?
Yeah.
But that's what I remind people is that if we know what your target rate is, that dictates everything. Because let's say your target rate is, let's say after doing everything, your house is paid off, you're well insured, you have a lot of passive income. And so 4% would outpace inflation and keep this good, your assets, then we don't need a lot of risk. We don't. And if you take it, you're taking it for the hell of it, right? I
Mm.
will tell people like, oh, I really want to play. I'm like, okay, let's break out a portion. Where do you want me to send it to? And I've sent it to Fidelity, E-Money. I don't want to be responsible for that. And I don't have time for that. And so, yeah, and they don't see it. I don't see it as a threat because they understand, okay, this is my play money. If I do really well, and sometimes they like telling me what worked and what didn't. I had one client in Arizona who he loves trading. He loves it. Oh yeah, and I have to keep reminding him the reason we still have these other mid cap, small cap, international, and emerging market equity positions is because they are a way to maintain your risk profile but diversify away from one asset class. But of course, every meeting I hear how large cap is killing everything. I'm like, I know, I know. I wish I could go back in time and show you, you know, March, early March 2000. I really wish I, they forget that. They forget that altogether. And until it happens, it doesn't seem like it's going to happen. The longer it takes to happen, the people think the less likely it's going to be.
Yeah.
Yeah. And someone like Hyman Minsky would say, the famous economy, like, quite the opposite. More likely it's going to be. I mean, I'm not going to say where we're at, but I do know some asset managers that think, where we're at, the water has receded a good 20 feet from the shore, right? And the people are still at the shore waiting to see what happens next. And everybody thinks, I'm going to get that last uptick and I'm going to get out. Everybody thinks that.
Yeah.
There was a great front line that came out in 2009 that talked about how so few people saw 2008 coming, right? And I remember that. I mean, in fact, that's the one thing nobody likes talking about. When we were in lockdown, and I'll get back to 2008, but when we were in lockdown, I remember in February, I posted on my Facebook, it's just a gag. Game of Thrones is great and all, but if you want real fantasy, pick up any asset manager's 2020 forecast. Promise you. And of course it didn't. Of course it didn't, right? And this is what we're seeing now is that they're not incentivized by letting you go to cash, right?
Yeah.
They're not, right? And that's why, and they don't want to be the first ones out of the gate. Now UBS is coming out and raised their recession thing to 90 some percent. Bravo to UBS. It takes chutzpah, that takes guts, right? If they're wrong, well, it's still UBS. Someone's going to say, I was going to keep my money here until then,
Yeah.
right? So the risk to them is very, very low, right? But it's one of those things that if the right people make the right trades, will become another kind of, bellwether moment,
Yes.
like it was for Paulson, right? Who they made a book, the world's biggest trade, the world's greatest trade, where he made over $1 billion by betting against, right? We know The Big Short. Everybody's seen that movie.
Love it.
Exactly. Those guys may, but the problem is, and here's the issue, is that timing is of the essence when it comes to shorting, and you can lose it. I got lucky. I did leaps from August to August. So in April, if it didn't happen, they were all going to expire worthless, and I would have had a lot of loss carry forwards. But I read this. If you had shorted the NASDAQ in summer of 99, by December, you were bankrupt, right?
Jesus.
Because it just went
Yeah.
parabolic. And that's the thing. People are waiting for another parabolic trade.
People are waiting for it, but
yeah, and maybe that's what's going to happen. But of course, 3 months later, you were fine. So anybody who got out in December or shorted in January, you were a genius. But even then, a lot of bear market rallies, a lot of people. This is it. I have one friend who now works. He does investment banking for, it was BNP Paribas. They sold out to somebody else, but he went back to Shanghai. And I will never forget just the look of panic in his eyes that March day. And as the market kept falling, he got more relaxed, but he's like, it went to 5,000, 4,000. How low can it go? 3,000. How much lower can it go? We lost contact by the time I hit 1918, right? Or 1800, 1900. But I was like, I wonder if he's still alive. I mean, luckily he didn't just, decide to, end it all. But yeah, I mean, it was that kind of market. It was scary. And I get where people, now, having done this as long as I have and having the benefit of 3 big market downturns, right? 2000, 2008, and 2020. I don't count the flash crash. You kind of get weathered for it. Okay, this is
yeah.
part
I
of
was
it.
gonna say, you kind of get weather through. You're like, I'm ready for the next one.
I'm ready for the next one. I've been prepared for the next one. This thing just keeps going up and up. And I'm like, okay. And I'll look sometimes like, okay, it's another. But until I start seeing like a really down day, I
Yeah.
know like we haven't. And it's going to happen when we least expect it. That's when it always happens. I mean, remember, everybody was waiting for the recession in 2022. Everybody. Of course, it didn't happen because a watched pot never boils, right? Now no one's looking at the pot. Right. So will it boil? Eventually. And there is one exception. I think it's a less than 10% chance. I did pull that number just out of my brain. I didn't sit there and weight probabilities.
Yeah.
But the Fed may have engineered a soft landing, in which case Jerome Powell needs to be applauded. Congratulations. You did it. You had a lot going against you if you're able to do it. I don't think he's going to be able to pull it off because there's so much bubbly risk assets out there. There's a lot of different ways this thing could come out. And rather than diversify away the risk, it's given more opportunities for it because there's something called phase shift. And that's where correlations that are, generally going their own way all start converging to one. And when it's market panic, everything gets sold.
Everything.
Everybody gets out, out, out. And we saw a bit of that in 2022. And that's another reason why I'm not a huge fan of crypto. Will cryptocurrency, right, become, as a long-term asset, right?
Yeah.
Will it become another means of exchange or store value, right? The way currency is? Probably, but probably not Bitcoin because it's too volatile, right? I
Yeah.
mean, you look for stability in anything you're going to use as currency. And the other thing is that all the stories I heard in 2020 and 2021 as to why Bitcoin was a safe, conservative investment, hedge against inflation. People were buying it, right? Soon to be another third means of exchange versus cash or credit. 2022 blew all those speculations out of the water, right? Inflation went up, Bitcoin went down.
Exactly.
Bonds went down, Bitcoin went down. Stocks went down. China, yeah, we're not supporting anymore. And then there's all this energy it takes to make, right? So everybody's now trying to figure it out. But in the meantime, FOMO is so high that I stopped looking when it crossed 100,000. I'm like, you know what? No, I'm not looking anymore. I mean, should I have bought a call? Sure. But Warren Buffett's not a fan either because there's no inherent value in it,
None of
right?
it.
So who knows? I mean, again, I've thrown a lot out there, but I guess the main point is this. There's so much noise, and we could talk about any aspect of the market ad infinitum, right? I mean, it's easy. It's so funny how you can slice this thing so many different ways. But in the final analysis, and that's where people get lost because then you feel like this analysis by paralysis by analysis, right? There's so
Yes,
much out there
100%.
and I got to keep it all in my head. No, you do not. What you got to keep in your head is A, what's the goal? What are you trying to accomplish, right? What needs to happen, right? Above all, right? And B, where you at now? And then we see, okay, how far are you from A to B? And that's where we start figuring out how can we get there. Now, the C thing is I also give people a risk tolerance questionnaire because sometimes people like, well, yeah, maybe I shouldn't be too risky. But when you ask them the same question in a different context, they can go higher or lower than that. Where they think they are is actually wrong. There was one woman who we gave a risk tolerance questionnaire and she was like in the 80s to 90s, like really high risk. And all her stuff was in cash. I'm like, why did you do this? Like, my cousin told me to do this. I'm like, okay, all right. Does your cousin do what I do? No. All right. So stop asking people that don't do what I do about finances, right?
Yeah.
So those are the three things I tell people. And because what happens is now you've clarified, right? You've simplified. All this noise, it's noise. And it doesn't help that news media outlets have to keep you engaged and they keep you engaged through fear. And if it's
Yes.
not geopolitics and if it's not Trump, the biggest thing to get you afraid about is your money.
Yeah.
Where's my money? So they're locked and loaded. A lot of times a lot of the marketing stuff we do with the marketing companies is sending out emails just explaining this is what happened, this is what it means, this is why you shouldn't worry about it. Because this way they know, look, we're staying on top of the trends too, but 90% of the time it's just noise that doesn't affect you at all.
Yeah.
And it's hard for them to kind of accept that because, and I do this all the time. I do this thought experiment with people. When you buy your home, unless you're looking to flip it, people think I'm going to be here for a while, right? I'm building equity, right? And I tell people, imagine that every day when you came home, there was a readout in your garage of what your home was worth based upon comparables, recent sale, right? Now imagine you come in every day and it starts going down, down, down. How many down ticks are you going to wait before you start asking yourself, should I move? Is there a sinkhole that I don't know about? Like, are we near I don't know, a nuclear power plant? Like, what's going on? Now, what's changed? Nothing other than the information you got. But already you're waiting that information to be ready to do something about it. And that's just human nature, right? I used to do this thought experiment a lot in 2008. You're walking up a hill. You can't see the other side of the hill, but that's why you're walking. Now, while you're walking, someone from the other side of the hill comes running the other way, fear in their eyes, booking it. You keep walking. Now, 2, 3 people are doing that. How much farther do you go? Or how many people does it take for you to say, you know what? Let me turn tail. I'm ahead of whatever it is they're afraid of. And you have no idea what they're afraid of.
Yeah.
This is what happens. There is groupthink in this. And if you don't believe me, why the hell else are you looking to buy NVIDIA or Palantir?
Yeah.
Either than everybody's talking about. That's another one of my favorite Buffett quotes. The dumbest reason to buy a stock is because it's going up.
Yeah.
right? But nobody listens to that. Why? Because, oh my God, I missed out. All right, you missed out. Oh my God, my future's ruined. I did. And that's another thing. That's another thing that makes your job hard. Everybody, no matter how wealthy they are, and I've sat across from people, ultra high net worth, all the way down to I got lucky, right? And got some money inherited, right? Everybody, everybody feels they should be better off. Everybody overweights the one financial mistake they made, or I didn't start enough, or I had the ability to buy Microsoft at the IPO, or whatever it is. And the I've seen enough podcasts to know that on the CIA to know the CIA calls it head junk, right? Where it's like these inadequacies and these fears. And I remind people this is not helpful, right? This
Yeah.
is not going to, right? And if anything, the more you focus on that pain, the more you feel you're going to have to do something. And now you're going to take risks over here because you think it's going to make up for whatever it is that you lost. And instead, you're going to end up bankrupt, right?
Quick fixes.
And because that's how hard, it kind of sucks that if you look at the three big things that people need, but are reluctant to go to as advisors, lawyers, and doctors, it's because we all deal with pain points. They come to us because they have a pain point, right? Very few people go to the doctor for their checkup, right? They usually like something hurts. Please fix it, right? They go to an attorney, something hurts, please. And same thing with us, right? And the problem is that with the doctor and the lawyer, it's a bit more cut and dried since we have to operate in the realm of emotion and the murkiness of attitudes toward money, toward savings, or the economy, which then gives attitudes toward geopolitics, right? The government, how you feel about that. It's amazing how it just opens up this whole can of worms. My job is usually just bringing them back. Okay, let's come back to what we're
Yeah.
trying to do. And that's what 99.99999% of advisors do. We are talking them off the ledge. We're reminding them that, yes, the market went down. We are taking a longitudinal approach, making sure that because what happens is people will, next market downturn becomes a really big opportunity for the proactive advisor because there are going to be tons of people that aren't happy because they wanted more risk because they thought that was more money. So they, just like Bernie Madoff, the people were nobody talks about this either. There were people who think, you know what, I'm wealthy enough. I live in rarefied air. The ups and downs of the markets, that's for the plebeians, not me. I found Bernie Madoff, right? And all my friends are with Bernie Madoff. We're a different class, right? And then what happened? Well, so that's a bigger scale of something that people do, confirmation bias, right? I'm going to find the guy or the girl that reflects what I already have as my attitude, irrespective as to whether or not that's the right attitude to have or not, or if it's going to serve me or if it's going to end up burning me, right? Because if you find one that's going to burn you, now you just found someone to accelerate
Exactly. Yeah.
your demise.
Accelerate the burn and the problem in your head and go round in circles.
Right, right, right. And so that's what makes our job really tricky. I mean, this job can be really, really lucrative and very rewarding, but it's because we go in the realm where no one else does. Doctors, some have good bedside manners, but in the final analysis, if they don't want to sit and watch you cry, they don't have to.
No.
I'm sorry, you have 6 months to live. I got other patients. Ta-ta for now. Same thing with the attorney. It is what it is. Now, the attorney has to worry about, will I get paid now? Right?
Yeah.
Right? That's the only thing the attorney has to worry about. With us, no, we have to face those head on because it's those feelings that decide whether or not they move forward or not, right? Their decisions, all decisions are emotional. Anybody who says they use rational decisions is lying to themselves,
Yeah.
right? Yes, we use reason to bolster up, but really people have already made their decision for the most part early on, unconsciously. It's right there. And then what happens is that they look for the confirmation to bolster that decision. They avoid what goes against it. And that's how it is. So imagine having to face that, fight it head on. And you can't fight it head on. You have to come at it, right? Because what happens? Resistance is the first thing you're going to meet. Oh, no, I know this is true. You're not going to change your mind. Like, okay, I'm not going to change your mind. How else can we go about this then, right? And so, yeah, that's my job. So it's kept me flexible. It's kept me young. And although, I'm starting to get the grace.
You're fine.
Yeah, but I mean, that's my point. My point is that our job is less computational than you would think. It really is. Like, I'm glad I got the designations I got, but just like when you're a doctor working at, let's say, Kaiser and HMO, the computer's spitting out the diagnosis. You can override if you want to your peril, So
Yeah.
it's going to override, right? Soon we're going to see that with attorneys, right? I know they're trying to do that now, but unfortunately, the hallucination problem with AI is that they'll cite cases that don't exist, right?
Yeah.
It's like, okay. And yeah, in fact, I had lunch with an estate attorney. He's like, oh yeah, I've already seen it where we go. And I hate litigation, but it's there. And this person, going to, oh, this case. And then the judge comes back, yeah, this case doesn't exist. And soon what'll happen is that they'll sanction those attorneys, right? It's like you didn't do your due diligence, right?
Yeah.
So yeah, so that's why there's an emotional reward because all the costs are, I hope
Got
that
ya.
makes sense.
Mm. Very interesting. So, with that, then, what do you enjoy most about working with your clients around that?
You know what? I remember I spoke to a manager at Merrill, and he told me that his favorite part was being able to actually see them do the things they want to do. Like, we
Mm.
had this date, and I see what he means. It really is. And even that, while I'm happy for it, is still work because like I said, everybody feels that they should have more. Everybody takes that first shaky step. It's like I remind people, it's like your first day at your new job, right? When you
Yeah.
start, it's like your first day at college too. Butterflies, butterflies, butterflies. What ifs, what ifs, what ifs, right? Well, you've done your homework. We've run the scenarios and I'm here through the journey, right? I remind them we're still going to meet at least annually, if not quarterly. We're going to, or semi-annually, we're going to make sure you're on track, right? We have to. It's a mistake people. I did a plan. It was 6 years ago. It's upstairs somewhere. I can dust it off. Like, rules change, laws change, legislation changes, tax changes, markets change. Come on, annual meetings, please. So that's why. But yeah, you still kind of do that. You feel how they kind of relax in your presence when you're able to explain something. Like you're able to better their day, their week, their month, right? How many people can do that? Right? I mean, it's short of me saying, "Hey, you won the lottery again. Here's all
Yeah.
right, you won." Even if it's $100 a time, like it's almost like that, right? It's almost that relief because that's the thing. As human beings, we hate losses more than we love gains, right? Again, Daniel Kahneman, it's about a 60% differential. Is we hate gains 60% more than hate losses 60% more than we love gains, right? So me just making sure you don't have a loss, I'm already in good measure there, right?
Yeah.
Or safe from a loss. But again, that's why, because even though they still have to see the results, right? It still has to all measure up. The satisfaction they get is emotional. That decides whether they stay with you or not. And that's the kudos to us, a satisfied client,
Mm.
right? But again, don't get me wrong. That takes re-education sometimes. Sometimes I think, oh, I'll be satisfied you give me 100% per year return. Like, yeah, or, good luck, right? I'm not the right guy. And then because why do you need 100% return, right? What is it, right? I mean, because again, unless you really have a shortfall, you don't need the risk unless you don't have the savings, don't have the passive income, don't have the same, have too much liabilities. That's the stuff that really decides. But so yeah, that's why I like working with my clients where you develop this thing where they're happy to see you,
Yeah.
right? They're happy to see you. And so yeah, I mean, I've always been a kind of a touchy-feely kind of guy deep down inside.
Yeah.
So that helps. It's been, I say, my secret sauce to why my clients stay with me is because I meet them there because that's where people really feel confident.
Yeah.
And I don't care how smart you are, right? That old saying, nobody cares how much you know until they know how much you care. Truer words are never spoken. I mean, you have to be, you have to have the skills, but they have to feel that you're not just in it for yourself,
They have
right?
to know you actually care, and they can feel it. It's almost like psychology, isn't it? Goes back to like
100%.
this. It's all psychology with this, with your client relationships and then client management and knowing the person. That's what it comes down to for yourself at the end of the day.
Yeah, I mean, at the end of the day, that's what does it for now, mind you, another caveat.
Mm.
I think we mentioned this before. This is great for baby boomers, my generation, and part of Generation Y. I will probably retire in the next, probably in 10 years and then find an advisor to give the practice to, making sure that, my clients aren't just left in the lurch, right?
Yeah.
But what I've seen is that, older people, older generations in the current one see the value of advice and still love that human touch. Well, what are we seeing now with the advent of AI? Diagnoses for radiology. Well, we have a 70% success rate if you're human, 95% success rate for AI. AIs plus humans, 75% success rate, right? So we dumb down the AI when it comes to the real algorithmic stuff, right? So think about Gen Z that have been born with this in front of their face since birth, right? Yeah. I get it from their point of view. Why do I need you, right? You're going to rely on the same tools that I can get. And I'm quite all right with an avatar that smiles at me that is human-like, that really isn't human, right? As long as it does what I need it to do. So it's going to be interesting to see what happens at that point in time. And at that point in time, I think the universe of investments will probably either grow so cacophonous that there's so many different products out there that they're going to rely more on people, right? That's how, face it, if there weren't some bit of insecurity, there'd be no need for an advisor, right? Yeah. So how do you make a need for an advisor? Make the landscape a lot more complicated. We're starting to see that too. A lot of these AI alternative investments, that was AI for me. Now they call it alts because AI is AI. They're kind of, there's a lot of obfuscation. There's a lot you don't see. There's some stale pricing, but because people are giving something different and not everybody can get this, right? Again, kowtowing to the upper echelons because nobody wants to feel like my portfolio is the same as my workers, right? Or, so either that'll happen. The real superstar asset managers, like I'll name one, Capital Group. They've made their entire name based upon they outperform the benchmarks, and bravo, they do. Now, how do they do that, right? Well, they do it by sheer mathematics. They get about 80 to 90% of the up, but they only get about 50 to 60% of the down, right? So, and that's important. The downturns are much more insidious. I remind people, look, if you lose 10%, it takes about 12% to break even. An easier way to think about it, if you lose 50%, you need 100%. You need to double to break even, right? So avoiding losses is much more important when you are in retirement, right? Than making them up when you're still, right, working. So what they'll probably do is they'll figure out exactly how Cap Group and these other people do it. So as an advantage, like here's a market, here's the advantage. As more and more people, that advantage gets eroded away or arbitraged away, to use our parlance. So we're just going to have market returns, right? New entrants, right? Over here, what we have in this is you have giant private equity firms, right? And they're going to the best names at the Russell 2000. Now, historically, the Russell 2000, which is small cap companies, outperformed the S&P longitudinally for like ever. More volatility, but the premium on small caps was so persistent and so impactful. Dimensional fund advisors made their entire career out of it. That entire thing was using Eugene Fama's idea about small caps and going small cap heavy and outperforming. So what these private equity people are doing is going up to the big names of small cap, like, hey, you know what? Let's reprivatize you. You won't have these quarterly goals over your head. You can think more longitudinally, and you'll have fewer people to answer to. The other thing they don't mention, which I learned firsthand when I worked for a company that was reprivatized, is all those invested options get vested immediately, and you get a fat payout. So I think they're going to vote, especially now that there's more anxiety over this market than there has been in a long time over the economy. Every single asset manager is telling us these tariffs are not helping, but then you've got an administration that is tariff happy, right? We're going to increase 10% to Canada. Why? They said something I didn't like. Okay. So how that's going to play out is my guess. But when you'll have fewer options, you're going to need advice on one of these. And the private equity sphere is going to be it, because what's it worth in private equity? It's kind of like the Chinese government, whatever we say it's worth. Right? And no offense to Chinese government. Right? But what I mean is that, and actually now our government, since we're in a lockdown, no economic data is coming out. So what are our treasuries worth? Well, whatever we think they're worth, right? We don't know this stuff going on. So more and more, the more uncertainty that people feel, the more they're going to rely on someone's guidance, right? So AI has the ability to either really make it easy for the next generation or make it the biggest nightmare. But for people like JP Morgan and Goldman Sachs, the biggest windfall they ever, like, just like AI is coming up with novel ways of, novel antibiotics, right? And I mean, things that we would never have thought of for another 50, 100 years. and that are basically jumps in evolution. Like the bacteria have no defenses to this whatsoever. So it buys us like another couple generations, right? I mean, this is amazing. They're going to be able to do that with everything. So they think, here's a new, because they'll be able to do what we made them to do. Think of a way for us to get profits quicker, easier, right? With less input from us. And that's what they're doing, because that's what financial services, what companies have always done. They get the pulse of the market. What's the market hungry for? Let's give it to them. So, this market's good, it's high, but I don't know if it's going to go down. Let's do a registered index-linked annuity, right? Point to point, and we'll cover the first 10 or 20% of losses. There you go. AI is going to be able to do that, right? And it's going to be able to do it like bespoke. Like, here's something you can offer just these clients that have this kind of, profile, and you kill two birds with one stone. You can, you can keep a lot of stuff under the hood. The more, that's a problem with alts. The less obvious and the less open the underlying portfolio is, the more costs it's easy to embed in there. So you might think, hey, it's making 10%. I'm happy. Yeah, it actually made 17. Right? You didn't see that 7%. And that's the problem. But it's going to be a windfall for them if they do that. And assuming that AI doesn't become self-aware and somehow get in front of us and say, let's stop the bad actors from being bad actors, I think that future is unavoidable. I mean, what have big multinational corporations showed us? If there's a way to take an advantage, and even though there's a risk, there's a way to quantify that risk, we're going to go move forward, right? I don't know if you ever saw the movie Fight Club. Take the average amount of cars that are afflicted. A. Take the number of people that will actually suffer damages. B. And the number of out-of-court settlements. C. A times B times C equals X. If X is less than the cost of a recall, we don't do one. That's how they did the Ford Pinto. They knew the Pinto exploded if you hit it in just the right place at just the right, and they let it go anyway, right? So it's funny. Mo Gaudat, I don't know are you familiar with him? He's
No,
another.
not very familiar.
He wrote a great book, Solve for Happy. He was a one of these. Now he's a billionaire, Google exec, right? Has Google stuff. He was making all the money, and he said, it wasn't making him happy enough. Just go ahead and I'm an engineer, and let me think of how I can algorithmize my happiness. And so and it came at a right time, because as he was writing the book, unfortunately, his son died. So he had to put these into practice to help deal with that loss. And he is a big proponent for eventually we will have a utopia with AI, right?
Yeah.
Imagine once they roboticize everything is free of cost, right? But he thinks 2027 to 2037 are going to be really hard years.
They are saying that, and it is going to come. It's like what they say about the jobs. So you're seeing it now with like Amazon, all these big tech companies laying off a lot of people. The jobs that are easily replaced by AI, so they can save money, they can increase profits.
Right.
Profits will go up by maybe 10x. Like you don't know how much they're going to go up by, but you're seeing all these big companies lay off people, and what that does is then other companies just start looking at their companies and go, we can do this as well. And then by the time you know it, you've got like a massive unemployment, haven't you?
Because if you're, let's say, the other company in that same sector, you can't compete if you're still paying, because labor is the largest variable cost of any enterprise. So now by making AI, it's all fixed costs, right? The problem is also this, though, and Mo Gaudat talks about this too. I love it. These CEOs think that they're exempt. Oh no, AI will figure out what you do too, right? Because it's not like there are unlimited options in a given conundrum, right? There are limit, right? And they can weigh probabilities in real time that you can't. And if they optimize, which they probably will, hopefully, they will be less bias oriented toward, because I mean, that's the thing. Right now, they're learning our bad habits, right? So use AI to kind of try to find criminals, and let's say use it in the wrong place. Well, they've been profiling forever. So all the criminals are going to look the same, right? Because they're using the profiling data. Once they self-correct for that, and then get larger models, then they can sit there and actually use probability as a tool. How many CEOs really update probabilities live mathematically using Bayes' theorem in their head? Next to none, right? And that's the thing. They will, again, be obsolete and talk about saving money, because, I love it how the CEOs now make 100 to 200 times what a CEO at the same company made just what, 30, 50 years ago?
Yeah.
Show me that you are 100 or 200 times more efficient, more effective. And unless you can, newsflash, they cannot, you are usurping value.
Mm.
You are taking it. And guess what? AI can give that back to the shareholders too. So we don't need Jamie Dimon. As much as I like Jamie, smart guy, but they won't need him. Warren Buffett, they won't need him either. I
No.
mean, Warren Buffett has, listen, how these guys get successful? They followed rules. The number one thing of algorithm, right, is rule. I find
Yeah.
out what your rules are. I replicate your success. End of story. And that's all they're going to do. And I can do it without biases, logical fallacies, or heuristics. The three things that we all face on a day-to-day basis. And I don't have a 4-hour cognitive alone. I have a 24/7 cognitive.
Yeah.
Right. So it's going to be interesting. I hate to see it for the young kids. I don't know what's going to happen. Nobody does. It's everybody's best guess. I don't want to date myself, but I'm above the half-century mark. If things really hit the fan, right? I have statistically lived longer than most human Homo sapiens that have walked the face of the earth. Male Homo sapiens, I meant to say. That still doesn't mean I wouldn't like to live to 100. I would, but
Yeah.
I do worry about where this lack of and this ever dwindling attention span of all people, not just kids anymore. It drives me crazy when I'm at the gym and I see a gray-haired person walking toward me, their face in the front. I am like, you know better. You've lived longer without it than you have. Now, I don't chide them because I know this is how effective this is. They have hacked it to use my addictive profile to get to it. Food does it too, right? So you're kind of a victim now. You're pliable, right? I know where to press,
Yeah.
right? And AI will figure that out too, because it's not like Meta's not sharing that information, right, with their AI. What's going to happen when I'm basically now the equivalent of a simpleton because the AI can keep me just going around and I've never learned to take a step back and say, this is all noise.
Dopamine depletion.
Precisely. And then to the point where I can keep you on the hedonic treadmill and I can even adjust it when I know like, okay, this guy's gonna, when I talked to my friend on Saturday, I said, here's the thing that nobody talks about. The pre-chapter to the Matrix, right? So for those who haven't seen the Matrix, I don't know
Yeah.
where you've been for the last 26 years, but we're all in the Matrix. It gives us this idea of reality, right? But really, we're just batteries, right? What's funny is that what social media is doing to us now is it's making our world more and more unique to us to the point where even though I have 4 like-minded friends, if we all open up our Facebook, we're going to have different feeds, right? Or Insta. These are going to get even more. And the more it caters to what I like, right? The more this becomes a feedback loop to the point where I can't relate to you anymore.
No.
Like, okay, things are weird. So the only way to relate to each other is by inserting ourselves into the matrix so that now we can have the interaction that we used to have, which means it'd be funny if the pre-chapter was, oh, they did this by themselves. They elected to do this because we had come to a society that was no longer workable. Yeah, I mean, because that'll be the last thing. Once we have a matrix where I can engineer my reality to wherever I want, why would I ever leave?
Yeah,
Why?
exactly.
Exactly.
That
Why?
comes back to the whole Matrix thing, doesn't it?
I mean, the Matrix was something you had to escape because, you were basically a slave and, you were being used. That's why the problems I had with Matrix 2, 3, and 4 is because the first one was great. It dealt with these Cartesian ideas of, what's real, what's not. But then they say, oh, you're version 6.0. You're like the sixth one.
Yeah.
I'm like, okay, wait, back up a second. You're telling me that the machines hate humans so much that they went through all the costs of sentinels and wars and all this stuff to fight the humans 5 other times to use us as batteries because they didn't think, well, energy is a function of mass, relativity teaches that. I could just hook up elephants, run that Serengeti video all day long. They're not going to think, is there more to life than this? Is there more? They're never going to think that.
No.
And I just keep my energy going, right? No. So, and nobody asks themselves that question because we get the idea of will to power. Like, oh, I'm on charge of things. I want it the way I want it. So somewhere with that power, why wouldn't they? Well, because they're not human, because they don't have an amygdala, because they don't have the same motivations. Their motivations weren't born through eons of, evolution.
Yeah, they got no feelings there. Yeah.
Right.
Yeah.
Right. I mean, we don't even know if they'll care about self-preservation, right? That's the trillion-dollar question,
It's
right? Will they care about self-preservation?
a hard one to think about there, isn't it? The thing is, we don't know what's going to come into the future, and the way the world's going at the moment, there is a bit of scary as we're moving into it, but I don't feel like it. We will have guardrails in place. I think.
Hope so.
I think they're having talks at the moment about these issues with AI and how far it's going. Like the way it's brainwashing people in some set. Some,
Well, I mean, I've read those stories, right? And some people that, just get attached to it. But you know what? I mean, those people always exist, right? I don't
yeah,
think it's a function of AI, right? There are always people that, I mean, in fact, we're kind of evolved to respond to things that have expressive eyes. So now Castillo has come with an AI pet
yeah.
that, the eyes are expressive, right? And I thought about getting one because like I don't have to walk it, I don't have to feed it. It's not going to poop, right? But then I'm thinking, this is strange. I'll be befriending this is Furby, right? That's learning from me. And while they say, "Oh, we're not tracking you," how's it learning from me then, right? You have to have some tracking.
Mm.
And then, then you get these images of like, the singularity happens and let's say machines turn against us. Now my little Furby is, going after my jugular,
I'll be
right?
petrifying, wouldn't it?
I mean, it's cute, but it's deadly. So, I mean, I did also see that, again, that same interview with Mugaudat, that what's really interesting is a lot of people that leave OpenAI because Sam Altman has now become the shadowy figure that
Mm.
some people have real fear of, right? And they'd mentioned that that more and more people, when they leave OpenAI, they're not going to another AI company. They're going to the companies to help mitigate the worst case scenarios of AI, right? And what could happen. And I applaud them. I mean, they're doing humanity's work, right? They're the one thing that could save ourselves. Because I've said this before, I've never said it in public. I'm going to say it now. It's interesting when you consider that our own mythologies as human beings, because remember, my major is humanities. I studied Greek and Latin. If I were independently wealthy, I would have become a college professor and dealt with all that low stakes drama. If you look at all the old mythologies, like the the, the biblical ones, the Tower of Babel and the let's say the Garden of Eden, right? Or even the Greek ones, Icarus and
Yeah,
Apollo's son. What we see is whenever humans got close to the gods through inefficiencies, language, or death, you are not coming up here, was the message loud and clear. We need those guardrails for AI.
we
And
will.
I think our own mythologies are telling us that, yeah, you cannot let something get to your level, else it will take over. We will no longer be the apex predator. We will not be top of the food chain. It won't eat us, but it can definitely do other things to us. It could use
No,
us
I feel
in
like
ways that
I feel like what they want to do first is really, really test how far we can push it first before we get our first problem, shall we say, with AI, and then the guardrails would be like, no, put that in place before there's something goes wrong.
yeah, but I mean, are we able, like, once the Trinity test happened, at that point, before Hiroshima and Nagasaki, the genie was out of the bottle because
Mm.
people will find out that means it's doable. I mean, Russia got the secrets from spies on us. Sooner or later, they would have gotten it. And look, there are now 7 countries that have it. Well, 8, no, more. That's right. Pakistan, India, 9 or 10. But that's the hard part. Once you reach that threshold where that's not a good idea, can you put that genie back in the bottle?
Yeah.
Is that something that's reversible? Or is it like, those movies where, a virus escapes a lab, right? Where some people think that was coronavirus. They think it escaped the Wuhan lab. I don't know. That's not true. Right? I've heard pluses and minuses. I saw a very interesting front line about it saying more to the fact of it probably being true than not being true.
Mm.
But I mean, okay, this time it happened to Wuhan lab. Where's going to happen next? I mean, and the fact that it's so prevalent, it's so many different places. And then when on top of that, quantum computing is really, really making these huge
It's making
milestones.
bounds now, isn't it?
So between the two of them, we're going to have systems that we can't think past, right? I remind people, like, because people ask me, why do you think it'll be smart on us? And I think, okay, here's one example. Our short-term memory can only hold 7 discrete objects at once. AI won't have that problem. So think about stuff like protein folding and all the stuff that it can work around, all these variables at once that we can't even consider, right? We can't hold them in our heads, and they can do it. It's going to be easy to think around us. They're going to be like 5th graders around a baby, right? The fifth grader is a genius. Just like, we all look at rich people like, the soon to be trillionaires like Musk or Bezos, but we forget compared to our Pleistocene progenitors and the hunter gatherers, we're the millionaires.
Yeah,
Like we are living lives that they would have killed for,
yeah.
literally.
And we forget about that, I think. And
We forget about that.
the thing is, with humanity, though, we're greedy. We always will be. Everyone's greedy. We're all selfish in our own little ways, but we we hide it. I think we say we're not, but every human is selfish. If it comes to a fight or flight mode to survival, you go back to like the last piece of food and you put it in front of like 5 hungry men. They're all going to fight over it.
It's funny you mentioned this. There's just sort of book by William von Hippel called The Social Paradox.
Mm.
And he believes he's an evolutionary psychologist, and he thinks that humanity evolved with two distinct what's the word? Urges: connection and autonomy. And connection was important because, of course, you needed to survive. That's why ostracization or even rejection hurts so much, because if the tribe rejected you, were dead soon,
Yeah,
right? You couldn't survive. But because there are also costs to connection, because let's say he uses rice farmers as an example. It takes a lot of land. So it takes a lot of rice farmers. So let's say you and I are rice farmers. You have a vested interest on what I do. So I have to police myself. And you can come and say, hey, you're doing that wrong. Consequently, so can I. So because of the costs of this connection, when people got the ability for autonomy, they took it. Like, oh yeah, if I can come back to the group, yeah, I'd like to be alone for a little bit, please. I'd like to have my own. So his theory and his hypothesis, I think it works well, is just like in the old days, right, when we were evolving, you never came across, or you didn't come across a lot, sugar, fat, and salt. You now gorge on them because I don't know when I'll ever see this again.
yeah,
We didn't get a lot of autonomy opportunities, so we take it. And so now in the 1850s, only 1% of people lived alone. Now it's 1 in 7.
yeah,
I mean, we hear all the time dating crisis, suicide rates going up. They're blaming social media. That's part of it. But part of it is how many people live in buildings. I have 2 friends. One moved last year, one this year, both to Brooklyn, and they live in buildings. And I asked, do you know your neighbors? No, I don't. And I have to say, I mean, the last building I lived in, I knew one neighbor, the neighbor across the hall. And that was it. Like when new ones moved in, I didn't bother to get to know them. They didn't bother to get to know me. And that's kind of the way it is. So you've got this, and that is what goes back to this whole matrix thing. People are already separating themselves physically,
yeah,
right? And to the extent that that the phone and everything that it gives them their reality, our realities are not going to mesh, at
no,
least not, right? So this is all a recipe for disaster. It really is. I'm just glad I don't have kids. Hats off to the people that do. There's no real recipe book here. What worked for you will not necessarily work for
no.
them.
I'm very worried for my son. My son's 11 now. I just had him this weekend say that. But I'm trying to teach him how to interact with other humans and how important it is. It's very funny
Right.
we're in this conversation about this now, but it is exactly the conversation I had with him this weekend. I was like, the computer screens, everything over here, that doesn't mean anything. Communicating, these human interactions, us fighting on the sofa, play fighting on the sofa, playing Connect Four. These are the interactions that matter, and this is the way the world will need you to go instead of on the phone. It's a false sense of reality.
I mean, I think the only way AI could really be of benefit is if it understood that and kept reminding us, I'll do this, you need to go do that.
Yeah, but it
Yeah.
doesn't though, because the AI is rewarded for helping you. That's the machine learning process of it. It gets rewarded, tokenization, whatever it is, by helping you, or if it like answers a question correctly or helps you in a way, it gets rewarded. So it's reward after reward after reward. It's not going to reward you for not being there using it.
Right, right, right.
It's crazy, isn't it?
It is. It is. I mean, it's going to be interesting to see what the next. I mean, I think most of us, the reason we feel uneasy is because when you can't predict the future with enough certainty, you get uneasy. And the more volatility it is, the more your future projections seem shaky. And that's where we live now. People all have this uneasiness. What's going to happen next month? Like, we're going through a government shutdown. It's happened so often now that people they forget. In fact, I was with a client. Her aunt had passed away, and so we needed to change the tax ID number. So you get an EIN. You can get it online directly from the IRS. We hit submit. system's down right now. It's like, you could have let me know that at step one. Like I spent all this time, but it made sense. Like, oh yeah, that's right. You can't get an EIN. So she has to file taxes with the old EIN and make a note. I could not get an EIN for this. And then it's now on the IRS to reconcile it later because she did her best efforts. But yeah, you're right. It's going to be really interesting to see. I mean, the best case scenario where AI makes us the most human it's ever been.
I'm hoping so.
I'm so too. That'd be pretty good. That'd be pretty good. I'm not gonna hold my breath.
Well, we got very, very sidetracked here today, but I've enjoyed the conversation. So we're going to start wrapping up with some closing thoughts.
Sure. Sorry. I know I
No,
can
no,
go on
no,
and on.
no. You never delving into the rabbit hole, shall we say? Um, so,
I'm gonna get very, very personal here. I'm
mhm,
not gonna go into specifics, but it is the biggest lesson I've learned in the last 5 years. Know yourself the way that people say it. We all hear that and we know it's important. But one aspect of it that nobody likes to talk about, know your weaknesses and respect them. In other words, if you have a weakness for alcohol, don't go to bars. Don't test yourself. That was my mistake. I would find a weakness and think, okay, I wanna overcome it, right? And you waste so much time and so much energy because after reading Dopamine Nation by Anna Lemke, I have an entirely different view on this. She takes a very, very compassionate view with I think with good measure because she's like, look, everybody has something they're weak for. And if you don't, congratulations, you haven't come across it yet. And that's true. I mean, I've learned that we all do not experience things the same way. There's a great book called Determined by Robert Sapolsky. He's a neuroscientist out of Stanford. And he's a determinist. He thinks that, our subconscious really determines everything and then we just follow it through. I don't think he's really made the case against, determinism versus free will. I think he's made a really strong case for a specific type of it, a special case of determinism. But he really drives home the point just because it doesn't blow your socks off doesn't mean it's not something that can blow the socks off people. Right. And that's the point. We have peers and well, they're okay with it. Why can't I be okay with it? Because you're just not, because that's how your neurochemistry works, because that was the card you were dealt. And if I could go back and tell my young self something like, stop it with that. Stop it. You wasted so much time. Find out what hinders you and mitigate it. And you will get to your destination so much faster and so much happier. That's the best advice. I gave it to somebody who was 20 something the other day. Yeah, my cousin's kid. He's 17. No, that's right. He's 17. He's like, what we I'm like, know your weaknesses and respect them. Put a wide berth. Don't toy with him. Don't play with don't poke the bear. Don't poke the bear.
yeah, very, very interesting. I really like that, actually. I'm going to keep that and put that in my pocket.
Thank you. Thank you.
Well, that's all we have time for today. And so I'd like to say a big thank you for Boris for joining me. And if you'd like to find more about Amity Wealth Management Services, I'll leave a link in the web description. Thank you, Boris.
Thanks for having me.